Good morning, everybody. It is Sunday, November 3rd. Let's jump right into market wrap up. Good morning. How are you? For those that observe the time change, it happened. Daylight saving time. Today's topics, we got a few of them. I'm going to run them in order, and we're going to talk about some things during today's new video. Warm welcome to all of the new subscribers. I do appreciate the support, and might be a little bit longer video. I tend to do that. I'm a little long-winded, but I have a lot to say. So I want to talk to you and just go over some things that are looking at for this week, things that we should be looking at, things to consider. None of this is financial advice. These are just things we're talking about. We're having a discussion amongst friends here. A nice discussion in the community. Let's start off with today with the election on Tuesday. I expect volatility in the markets throughout the week, the day of the election, up until the results are announced. Definitely a lot of noise up until the election. We've seen it, we've witnessed it, we are experiencing it, and it is very close. So this is Sunday. Hopefully that you're watching this on Sunday. It is ahead of the new market week. And with that said, let's take a look at the economic calendar. Something to note, in addition to Election Day on Tuesday, let's take a look at we have factory orders Monday. We have the U.S. trade deficit, ISM services on Tuesday. These times are in Central Time, so adjust those for New York or your time zone. Wednesday, so it's going to be the first day following the election, the S&P Final Services PMI. So you're going to want to look for those numbers as well. Thursday is where we have jobless claims, wholesale inventories, Jerome Powell press conference, as well as the rate decision from FOMC. So we're going to want to take a look at that. We're going to want to see what's going to happen. We have consumer credit following that later. And then Friday, we have the consumer sentiment preliminary report and monthly U.S. federal budget. So consumer sentiment, something always to consider. We want to see how the consumer feels about the economy, feels about the state of where things are at. Confidence within the economy, confidence with not engaged within the economy. And with the rate decision from Jerome Powell, we're going to want to see what the Fed's been doing, what they're thinking. We're going to take a look, what the analysts' expectations are. I'm sure we'll see some media headlines this week. I'll post tomorrow once the market opens. A popular tool is CME, FedWatch tool. You can take a look at kind of how the market's pricing in probabilities of where it perceives the rate hike, or not a hike in this case, but a rate reduction would be. So we'll take a look at that, and I'll post those tomorrow. So it's a CME FedWatch tool. You can take a look at it now if you want. I just try to wait for the market to open just to have the most accurate data. Although it's based on probabilities, it's still with the most up-to-date information. And with that said, on the economic calendar for this week with the election, let's go ahead and talk about DJT stock as well. And we're going to reference that. We'll come back to the chart. But I want to go back to an option flow report I posted back on October 21st. And I do this in a longer format on X. I'm sure you've seen these before. Let's zoom in here just a little bit for you. And we just kind of talked about where the net premium was. We had a very large day, where things were headed, how the premium had kind of ramped up. We were also looking at some things where, in particular, like the spot gamma exposure. And this was something we've talked about before, is the assumed value of gamma exposure. The market makers need to hedge per 1% change of the underlying stock price. And $35 strike, this was as of October 21st, for the 25th expiry, the November expiry, as well as the 15th. 35 strike had the highest net gamma. As the election drew closer, so did that volume, so did the volatility, and so did the total option premium move into the stock. But 35 as of that October 21st post, that was kind of the number where things would start to get a little more expensive, probably see a little bit more volatility within the stock, target around that $35 strike, and certainly did see that as reflected in the daily activity as well as on the chart. So it's kind of something I wanted to go back to, because we were highlighting some of these calls here, in the $30, $31 calls and the $30 and $40 calls ahead of the move. Now, granted, some of that volatility has come down, but some of those premiums, up until the volatility They were 400, 500% moves, 600%. Caught a lot of those calls for this week's expiry coming up, as well as the November 15th monthly expiry. So it was something we were seeing. It was something I was posting, was including like the open interest updates and kind of where the flow was headed in that direction. And as we jump over to the stock here, we can see when the 21st we put that report out. Let's see, the stock on that day opened at 29.96, closed at 31.30. Like we said, we saw that 35 in the 40s. And we saw that move all the way up to October 29th. This is just regular market hour trading data, high of 54.68. So certainly a move after the option flow report, as we talked about, hitting that $35 area, which came, let's see, the 22nd, got up to 34.58. Then the next day, 36.77. A little bit of a pullback with a little less volume. But then the following day, on October 25th, a new higher daily high, higher volume, and then a rocket that following Monday on the 28th with even higher volume and then a push even higher. And we did see some sell off the last 3 days. Trading there, let's see, 30.56. And then the high, just want to make sure the numbers are right here. The high Friday there, 35.68. Low 30.03 with a close of 30.56. Now the 20-day moving average at 32.63, the 9-day at 36.79, with the 50 SMA at 22.92. So the stock's definitely been trading well above the 50 the closer we got to the election, and now the election is here. So as for where the stock goes, watch it daily, watch the price, watch the volume, watch the options. This is, if you go back here, this was around September 23rd. This is when the lockup period expired, where DJT insiders were able to sell. So you can see the stock worked its way down to kind of let the bottom here at this point in time, right around as that lockup period expired. And then the stock, let's see, hit a low on September 24th of 11.75. So quite a rally from September 24th, just in a month's time. On DJT there from the bottom, roughly here, 356% run there. And I mean, there was some money to be made in the options. Some, with shares, depending on where you're in, where you're out. Always manage your risk, essentially, especially in something that's got a lot of volatility attached to the options. So, I mean, it's anybody's ball game here. It's kind of like, is it a buy the rumor, sell the news type situation? Yeah, that's sometimes how these play out on Wall Street. But, it's anything up in the air with the volatility. But let's jump back and take a look at some of the flow there on Friday on DJT stock as we move through the video here. We'll pull up the net flow there for Friday. We can take a look. A little bit of a push in the net call premium into the close. Premium that day, 168 million, 242,000 net premium. So although strong total premium, not as high on the net premium. And top volume was around the November 1st expiry on the calls, the 30 put, 31 put, 40 call, 29 put, 35 call. So these were your largest volume Friday there for the Friday expiry. And then with the largest open interest as of Friday, because we'll want to check the open interest updates tomorrow. Let's see, $10 puts, the 70 call, $50 call, those are expired now, November 1. $5 put, 15 put for December 20th. $60 call for the 15th. So that's where your highest open interest levels are at. As for total premium, you can see Friday, 167 mil. Thursday, 202. 307 on Wednesday, 477. Very large day total premium there on the 29th. And let's take a look here what some of those hottest contracts were on Friday. Most of them are going to be for the November expiry, but we've talked about before how we can filter those out if we want to look at past the November one. So your top by premium were around the November 1st, as well as look like some multi-leg transactions, looks like set up on a spread for $170 puts for January 2027, as well as these 95s. I think these were all together. I'd have to look at that separately. We do that in another video, but we can tell by the multi-leg these were more than likely all part of a strategy, just due to the size, the premium, the multi-leg, and the expiration date as well. 40 calls for November 8th was the top one there, if we're looking at something like directional per se for this week. So we can take a look at the 40 for November 8th. Bid volume and ask very similar. Volume a little bit larger than open interest. So this is something, again, we'd want to take a look at the open interest update on Monday to see possibly what contracts changed hands. Could have been a big change of hands right here as the contracts sold off in value, as the IV at 472%. So extremely volatile. Definitely manage your risk if you're trading a name such as that with a high IV, especially with options. Be very cautious. It doesn't take much to go south very quickly. Even the $35 call November 8th moved down from around a fill of 900, filling around 627. So about a 30% drawdown. 3 million premium Friday, again, very high implied volatility at 470 or 468%. So if we take a look, go back over here to the net flow, try to pop up here that we'll take a look at that gamma again one more time as we move on to our next name during the video. We'll pull back up DJT, and like we showed before in last week's wrap up, we talked about that gamma. So we'll access that here. We can take a peek at that. We're using the Unusual Wells platform, which kind of just keeps it held together, all that. So let's see. At the 31 strike there, the highest spot gamma. Let's take a look here, actual gamma. Gamma exposure by strike. So the highest at the 40. Both put gamma high and call gamma, with net gamma being represented what's there in the red. So you can see that's the highest area of exposures around the 40 strike. It's definitely an area of interest, an area that folks are looking at. So up or down. So let's take a look here. Moving on, let's jump over to Tesla. I know we like to talk about Tesla. Take a look here, pull up some of our flow there. Take a look at the chart here, 248.98 on the close. Still kind of in these green shaded areas. We've talked about these before, going all the way back to September and where we derived at those levels. Let's see, a close right above the, let's look, right above the 9 EMA, 248.60. The 20 EMA is 242.76. With the 50 SMA at 234.26. You can see those values on the far left side there of the chart. Kind of in line there. Nice push up. Still have this gap here. This was following the robo-taxi event. See where the stock's been. The areas we've targeted in the past, support and resistance. And just areas that we've looked at the stock in the past. Areas that we've traded in the past as well. So let's take a look at some of that flow there on Friday. Pull up here Tesla. We had a nice little push in a net call premium there into the close. Pushed that all the way up, net call premium to 25, almost 26 mil into the close. So net premium on the day, 18 million. Total premium, 767. Remember that day where we shared the 3.8 billion. Normal day, billion, billion and a half. Larger day, 1.9, 2.3. Big day, 3.8 bill. So 776 mil. There on Friday, most of your highest contracts, again, are going to be targeted around, you guessed it, the expiry on Friday. So we'll take a look at those when we look at like the hottest contracts. And like I said, that total premium is 767. You can see how that kind of stacks up. We had that 3.8 day following earnings, 2.5 the following there on that Friday, October 25th expiry. But let's take a look at some of those contracts there from Friday. See where some of that money was coming in, coming out, what they were doing with Tesla. Some of the larger premium there, we can take a look here. 200 calls, that was part of a multi-leg transaction there. Let's see, 250 calls for this week was the largest premium there, 23.4. 250 puts on Friday, the 250 puts for this week. 249, that's part of a strategy there, the 9/19/2025 expiry. 240 put, we can see the 100% multi. We've talked about that before with the multi-leg trades. 250 put, November 15th, 255. 250 call November 15th. These are where our premium's at, sorted by premium. So if you want to take a second there to pause or screenshot, you can do that. Here, I'll zoom it in for you. If you want to pause or screenshot those premiums, you can. Or pause the video, whichever you like. That way you can just kind of take a look at it and go back. Because, I sometimes post them separately, in just data format on X. This gives you a chance to kind of look at them also in real time. 250 call November 15th, 260 November 8th. You can see a lot of those are 50-50 bid and ask, meaning buyers and sellers. Now, it's kind of hard to just find one that's directional. They don't make it that easy. Some of this flow a lot of times is just noise, but you will see sometimes things that are, potentially directional or a bet signaling on a move ahead of the move is kind of how it happens. You'll see the bet come in and then the news to follow is kind of how that works. And then the bets shift after the news, from those adjusting based on the news or buying into the news or selling the news. It just depends on the actual scenario there. So those were some of your hottest contracts there on Friday with Tesla. Like I said, with the numbers there on the chart, the moving average. Here's your other moving averages. Here's where the stock's been before. Stocks move up, they move down. We try to look at moving average, try to look at volume. We try to look at headlines. We try to look at sentiment. We try to look at option flow. With this week, with the election, volatility, Fed rate decision. Yeah, just a lot of things to look for. Elon Musk been very supportive during the election process. So definitely something with the stock. It could be subject to volatility in that regard. Regardless of your views on it, we try to take our opinions out of it and just try to focus on the facts, what we can hypothesize, what strategies we can make for our trading plan, while we try to check the bias at the door. The objective here, not necessarily be right or wrong, is to, cut your losers quickly, mitigate your risk, obviously. It's just try to make money. It doesn't matter really about being right or wrong. If you're wrong and you lost a few bucks, you managed that well. You're able to preserve your capital and move on to the next trade. And it's just kind of what it's all about there. I know it's hard. It sounds like easier said than done sometimes, but it's sometimes, what's the most important thing to do is to kind of check that bias. As I always say, run the, trade the plan the run, and run the plan. So we talked about DJT, we talked about Tesla. Now let's talk about NVIDIA, because there was some exciting news. I know right as everybody's calls expired Friday, there was some bummed about that. But let me flip on just for a second the after hours data, just so we can see that jump here. 139.32 is what NVIDIA closed there in the after hour. However, it closed at 135.37 Friday because there was news on Friday that, I'll pull it up here on my page. If you saw that, we had posted about NVIDIA. Let me zoom this back out here. Yeah. NVIDIA is going to replace Intel in the Dow Jones Industrial Average, effective prior to the opening of trading on November 8th. So the news of that is what shifted NVIDIA up there after hours. So we can take a look at some of that flow then from NVIDIA as well on Friday. See if maybe anybody jumped in Friday for this week expiry. Maybe they'll look in, or maybe somebody knew about the move ahead of time. And they will do that. They'll adjust, they add, they subtract to these indexes. So let's see what we got here. NVIDIA deep in the money 55s. You like seeing that for December. 135s has expired already. The 136s for this week, about 12.7 million premium there. So if that price holds through the week or even at the open tomorrow's contracts certainly are going to move up. Let's see, 140s for December 20th, the 140s for November 8th, 135s for November 8th, kind of closed in the money. If that price opens tomorrow, 139 and holds, definitely a nice move up on those contracts. Nice. The 135 calls in the money for November 15th. That's a nice trade there, especially if you bought those. They're in the money. Closed Friday. See, we had buyers here. Sellers at the bottom. We'll check open interest because volume was 15,000. Open interest 40,804. So we'll see if any of these big buyers left because we had about 9,000 ask volume, 5,000 at the bid. So we'll see. Premium Friday 854 million total premium. Net premium good though, up positive 15.8 mil. See net call premium around the day 6.53 mil. You can see there on the day there. On the day for NVIDIA. Let me zoom this back out here. I zoomed that in too much. Let's go one more time here. There we go. That might have been too far. But I was just looking at the historical total premium there. It was 1.4 on Friday. 2 billion. The week before 1.2, just so you could see for perspective there on that total premium, how that stacked up there on Friday. So definitely some things to look at. Let's take a look here. Let's pull that net flow back up one more time on NVIDIA. And take a look at some of that gamma real quick. See where they were. See how that was shaping up for just a second. And always, feel free to, send me a message, reply, pause the video too. I watch a lot of videos myself, and I'll pause them and, take notes, come back, ask questions, or I figured it out. So just things like that. So I try to pace it where, you can pause or slow, and it's up to you if you want to watch it all the way through or bits and pieces, up to you. Let's see, the highest here around the 140 and 135. So definitely kind of reflective of what we saw in the flow there. Highest money around the 135 and 140, and we could see that kind of based on the gamma exposure as well. So something always to consider there. Pull over the spot delta, or pardon me, spot gamma. We can see that again, highest open interest on that 140, and then 135, and then the volume at 136. You can kind of see where the spot price, which is where we're at. You can see the gamma exposure gets a little more significant there as NVIDIA. So at 140, and the addition going to the Dow Jones Industrial Average, that price holds in favorable market conditions and positive sentiment this week. That could be opportunity and exciting. And we'll leave it at that. How about that? Also, other news Friday, for those that might be following the Chewy name, Chewy was up, and we'll pull up the charts. I noticed it came on my scanner in after hours, up like 6 points or 5 points. So I was like, oh, wow, okay, what a move, like that after hours. Is there news? Because I know we had posted about Roaring Kitty sold his Chewy position, which we had kind of speculated on in early September based on his X post. But I thought, what moved Chewy up like that? 28.57 was where it closed in after hours, but it hit a high of 28.75, and it kind of caught, stuck out and hit this the scanner because we had closed at 27.10. Well, Chewy was actually added to the S&P Mid Cap 400, so that's kind of what prompted that move. Chewy up 5% was the trending headline there in after hours on Friday. Don't know if you saw that. Up 5% on the mid cap. It was interesting too. We saw some 27 kind of in the money calls last week coming in. So I don't know if that was a trade to prepare for the inclusion of the mid cap, so they could grab the shares at 27 and move it over. Not really sure, but it was something that we had saw. And let's see if we can see some of that flow about Chewy. Always a good when a name gets moved into like the mid cap, whether it be the S&P, the large one, or the mid cap there. Let's take a look though at some of that net flow on Friday. See what some of those options were doing. It's kind of flat there with the net put premium. Did see a little bit of a jump here earlier in the day on some net call premium. It was kind of flat. Let's see. Premium on Chewy was only 904,000. Net premium 7,000. So there was not really a lot going on per se there with Chewy. There was some volume for the 2750 calls, but that was Friday expiry. But there was also some for the 2750 on November 15th for this week. So we did see some open interest. There was of 2466, some volume, 1160. We saw this come in. Not a lot of money, 100 grand on what looked like about 1,000 contracts at 2750 for the November 15th expiry. So this $28, $29 price hold from after hours, those are going to go in the money. Let's see, Chewy, I think did these close in the money? Yeah, they closed in the money already, but any higher move up could push the IV up and the premium. So those were filling at, it looks like, about $100 each. So 1,000 at 100 grand. Targeting the November 15th expiry. So I'll check the open interest tomorrow. So it might be a little bit of positive sentiment with the headline. We'll watch the contracts for sure. And we'll see, with the move there on Chewy, 28.55. See, 27.10, I apologize. So almost at the money. But if the move, like I said, with the after hours, if that continues into next week, you might see that or the following week. So just, something to watch there as we look like Chewy on the daily chart, closed 27.10. The 9-day EMA 27.21, the 20 EMA at 27.83, and the 50 at 28.65. So this may give that move to go back to the 50 days. So, which would be, like I said, 28.65, which is kind of where it was at if we include that after hour data. So it could be a rejection there, or it could be the start of a move higher. It's always just something you kind of watch with the volume and if your idea is you think it's going to move higher, you then, if it doesn't, that's your invalidation. If it does, that's your validation. Always look, for continued volume, follow through, and things like that. So that's just something to, look at. I know the name's been popular and unpopular at the same time, it seems like, on social media following the, confirmed news of Roaring Kitty exiting Chewy. But you never know with the sentiment. Still very mixed within the position here. I'm checking my notes because I always want to make sure I take notes, make sure we're covering everything that we talked about. The other thing I wanted to discuss too, I know Super Microcomputer, from their accounting firm leaving last week to the Hindenburg short report a few months ago to the delayed 10K to the not delist notice, but the notice from NASDAQ just because they weren't in compliance with earnings. They were issued a notice. I mean, the chart has just been getting uglier and uglier. The alleged DOJ inquiry by Wall Street Journal. So definitely something there. Let's see, around 2605 was the close. Where was that at? On the 29th, a high of 4960 and down all the way here, 2605 with the low of 2571. So Super Microcomputers definitely, I'm not sure what the outlook is there, but there's a lot of noise, a lot of selling. It is continuing to go down, and I'm not sure what the end game is here, but I'm not sure. I mean, it's just got a lot of noise. Someone's asking, is this now time to buy the dip at 40? Well, look at it now at 26. I don't know. I mean, I just know someone asked me, I said, well, personally, there's just a lot of noise. I mean, if there's an opportunity, great, but does the reward outweigh the risk? If what's all being alleged is true, there could be more trouble brewing, and that wouldn't bode well for a common shareholder. Let's, like, hypothetical here. Say there was an issue, allegedly, and maybe there was a delisting, or maybe there was an issue with the common stock. I mean, you would hate to see common shareholders wiped out. I don't know what the end game is here. I just know I can report on what I see, which is, the volume, the chart, the headlines, and until we see more, we're just kind of left in the wind, with the Ernst & Young saying they've basically left. They're gone. They're not the firm anymore. For Super Microcomputer, it just it brings up a lot of questions, especially those that are in the industry and understand the language. That brings up a lot of questions and a lot of concerns. So you look at some of that premium Friday, 374 mil. There was some net premium, but both negative on the net call and net put. Let's see that volume. A lot of it was targeted towards the Friday expiry, November 1. And bearish. Yeah, I know. Before we saw it was all bullish. It seemed like now it's all bearish. So I had posted the other day, I sold my Super Microcomputer. I replied to Unusual Whales, actually. I sold my Super Microcomputer on March 18th. The day it was added to the S&P. I even posted my brokerage statement showing the date. March 18th is when I sold, around $1,300 a share on my commons. So, yeah, I mean, I sold the news. It was added. That was the day it went to the S&P 500. It's down, like 80% since being added to the S&P. Let's pull it up. It was March 18th. I'll just pull up the weekly here. So let's go to March 18th. And I'll even do the benefit of the doubt. Let's see. The open March 18th, 110. So not the full high, but we'll just go 110.74. Whatever. It doesn't matter. I was out. We'll call it to here. Since being added to the S&P, Super Microcomputer down 76%. Is there an opportunity? I don't know. It's trading where it did the round tripped. I mean, this is where it was at last year, ahead of the AI hype. So I'm not saying it's hype. I'm just saying ahead of the AI hype, and that you can see where we're at with numbers, Blackwell, NVDA, the money, the revenue. The forward earnings, price to earnings, yeah. So, but nonetheless, still down 80% roughly. So, that's tough, I know. But let's look at where was that money actually on Friday in Supermicro Computer. Take a look at some of that flow here. It's a multi-leg, but it was on the bearish side. I believe almost a call. I can't even scroll till 30 calls for November 8th. So, right, you kind of not, they were in the money, but they're out of the money. It's probably 50-50 call buyers and sellers. Yeah, all the way down. Bid volume and ask volume. Volume over open interest. So definitely take a look at that. As you can see, the buyers on the 31st, there was some open interest and volume carried over. You see the open interest carry over Friday. Volume Friday way over open interest. It says 57 ask. I'd still want to see that on open interest, but about 6.5 million premium. So it could be someone betting on a move back up. Volatility has certainly spiked in the premium, so certainly something to be cautious about. Good and bad. Great if you're selling on selling volatility is great. Sell it, and it's probably going to go down, and you'll keep your premium. Buying volatility is dangerous also. They're both dangerous. They both present their own risks, but I like to buy lower IV, sell high V, and a high IV environment, sell IV, whether it be through cover call, in an attempt to capture the premium and wait for the implied volatility to come down and then the premium fall and pocket the difference. So that's how that works. 27 call November 8th. That's kind of right at the money. See some volume there. That might be somebody. Let's see, 3.2 mil premium, but 1.8 mil in that candle at the ask, suggested at the ask. Could be a bought to open considering the volume's much larger than the open interest. 27, so they're right at the money. 244% IV. I mean, the contracts were just 700 a couple days before, and they were buying them at 350. They could be looking for a move. So something like that, if you were to follow it, be careful. They're going to get out as soon as that move comes. They may be looking to buy more. They could be looking to unload. I want to make sure through open interest, even though it showed that it was filled toward the ask, contract price could have been moving. So the appearance of the ask could have also been truthfully a sell. For example, I shared a couple weeks ago, TJ the Wheeler Dealer, he was selling, I believe it was selling some covered calls. Nonetheless, it was a sell, but I believe it came through at the ask, even though he was selling at the bid. So sometimes that can happen depending on the spot and where the price is in comparison to where it was filled at compared to the bid, the ask. Because like if it's on the bid, unusual whales in every option flow platform is going to show bid. If his spot was at the ask, it's going to be the ask. But sometimes you got to go back like we've done here in the past and look at the videos, look at the transactions, and look at previous historical volume. And sometimes you can see, oh wait, that was the appearance of the ask, but it was actually at the bid or vice versa. So it's not always just instantaneous. With flow, there's a lot to sometimes drill in, and that's where I've kind of always harped about unusual whales being very granular. For example, with how far. Like we were just looking at the hottest contracts. We saw the 27s. We see this volume. We can take it a step further. We can click the candle. Now we can look at the actual real-time data and the time of fill. Not just, hey, somebody's loading a bunch of SMCI calls. This is the actual real-time data. And unless you're like a paid subscriber with Unusual Whales or another flow service, you'll never gain access to the tape. This is the real-time. I see every order that comes in. Whether I look at it, it's a different story because they come in extremely too fast. But I filter a lot of things through a custom filters, flow feeds, which I've shared before. And I'll make some other videos about those flow feeds. But these are all the options as they come in, real-time data. So that's what's important as we can see some of those. But if we look at some of these here on the 27, we can see some of these are denoted as a multi-leg. So it's a good thing to always look at these because, for example, you might thought 27s, I thought in the money, more open interest, or pardon me, more volume than open interest. Maybe someone's bullish here, but then you can look at it, what actually happened here, and I'm glad we pulled it up. Looks like sold 25s and bought 27s. So that's a call credit spread. So how that works is the buyer or seller here receives the premium for selling the $25 calls and in the same transaction buys the 27s. So that's called a call credit spread. So I'm glad we looked at that. So how that works is here, we'll use like the profit loss calculator. I really like to look at this when the market's open, so it gives you the most accurate data based on the current prices of the contract. But for just gross intents purposes of the video and education here and just exploring just our conversation, we can talk about it. So as long as the stock doesn't move up too much, they don't lose any money. As long as the stock stays flat or trades less, they keep their premium. So that's just kind of how that works. But I'm glad that we pulled that up because sometimes you wouldn't see that. And if you don't drill into the aspect of flow, a lot of people just sometimes don't necessarily, I'm not saying they don't know what they're doing, but they may not have looked at it enough. So they might just blindly see the screenshot and share it. But that's not the full context. You might think, oh, they're loading 27 calls, I'm going to follow behind. No, they were loading 27s because they sold 25s against them. There's a big difference there. And if you're with me long enough, I'll get you acclimated with all of that. And that's the whole part of why we're doing this, to enjoy it together, to work through with one another. But yeah, that's what was going on with SMCI. I know Amazon, it seemed like the Hail Mary there following earnings. Let's pull up Amazon. Because they came through. Got close Friday there on the high of $200.50. And then it was, I think, as we talked about, that, let's see here. Let's see, I'll just pull it up. Yep. And then as we talked about the $200 sell wall, many people, then it was, okay, there we go. And then Friday, Bezos sell another 16 million shares of Amazon worth $3 billion. Yep, $3 billion. Right as we got up to the 2 again. Funny how that works, right? He's going to sell, though. That's his money. I mean, what do you do? What do you do? Let's look at that monthly on Amazon, though. When everyone's like, oh, I'm not buying Amazon here, it's too expensive. They said that in 2010. They said it in 2011. They said it in 2013, 16, 18. Oh, no, it's over. Yep, it wasn't. It was the pandemic. 20, oh, it's over. Yep, it kind of felt that way with the Fed hitting rates, and 22 was rough, right? 23, oh, it's over. Nope. And continually new high. Sometimes it's best. I'm a long term because I'll be 45 next year. I love to zoom out on a chart. Sure, do I make money intraday? Yes. Do I lose money intraday? Yeah. Pardon me, bless me. But do I like long time frames for ideas? Yeah. So where's this? The low of the great financial collapse, 2008, to now, Amazon. 11,000%. Yeah, sometimes the long term's worth it. So it depends your plan, what you're doing, what your trade. Do I like to trade Amazon intraday? Sure. It's a big name. Do I like options premium on any of the names in the S&P? Absolutely. Why? They're very liquid. My orders fill quick. There's always a buyer and there's always a seller. So yeah, Amazon, how about that? Let's look at that flow, though, Friday on Amazon while we're here. And our last ticker for today's video will be MicroStrategy. As we get ready to conclude, Amazon, let's see here, was the Friday expiry of the 190s. 200s on tap for this week. Activity there, both buying and selling. Volume, though, 49,000 over open interest of only 8,000. A 17 million premium, so definitely good because premium Friday at 670,000, or pardon me, 670 million. Net premium about 20 million on Friday. Net call premium up, though. Nice. You always like to see that. Kind of a bullish sentiment there. You could see a move up. You could see a move down. You never know. I don't have a magic 8-ball or a crystal ball, and nobody else. We try to work with the data we have, formulate our best hypothesis, create a plan, follow our plan, execute our strategy. If it didn't work, don't be afraid to cut your plan. It all comes down to managing your capital. If I take a trade, for example, it was, say, $100, and it's drawn down to 80, I don't care. I'm gone. I've managed my risk and contained it at 20%. I like to be 10 or 15. 20 is getting out there. You know, I don't. Who likes to lose money? Nobody, and that's how you stay long term, by managing that risk. So, for example, somebody could say, well, hey, you know, you never gave it a chance. Maybe it goes back to 110. It could. Maybe it went back to 60. I'm glad I left at 80, and you would too. It's always good to play hindsight and shoulda, woulda, coulda, but shoulda, woulda, coulda doesn't pay my bills or feed my family if I didn't follow my plans with my trading rules. On the same note, though, say I was in at 100, it moved to 120. Everyone's like, it's going to 150. I'm already trimmed, if not gone, at 120. But that was only 20%, exactly. But I can take that base hit and compound that win with another win and another win and another win, a win. And compounding wins is how you stack it, really. That's how I do it. I don't need a 500, a 1,000. Do I get them? Every once in a while. But you don't trade to get a 500,000 or a 500% return. You look for at least a 1 to 1.5. If you're putting up 100, would you like to get 150 back? Yeah, that's the ideal way. Would you scale and trim out as you moved up to that number? Absolutely. So if you were in at 100, your plan was leave at 200. Okay, now you've seen 120, you take a little bit out. Oh, now you're seeing 150. I'm going to take some more out. Now we're at 170. Now I'm going to exit a good portion. Oh, 190. We're getting very close. I'm going to take a little bit more and leave the rest. Now we're at 200. My target. And there, you can take everything because you hit your objective as you should. Or you may decide to lay a little bit of house money down and decide, we're seeing 200. I already left some at 190. Let me go ahead and set a stop loss here on these remaining at 195. If I come down a little below target, I still protected, I still captured, I still followed my plan. If you move above, then you make your other decision, but you captured your plan and your gain or your loss. So that's kind of how I mitigate that. And it's always something I think important to look at when you're looking, no matter what you're doing. In all aspects, kind of trading, they'll kind of trickle down to other parts of your life involving just complex decisions, decision making, thought process. They kind of intertwine together. So let's see here. 200 December 20th had 10 million there. Those were expired already. The 180 are in the money November for this week on the Amazon. A little bit of activity there into the close. Let me put on the 10-minute here, clean that chart up a little bit. See a little bit more ask over bid. I mean, in the money, it's always exciting. I like in the money calls personally, especially with a little bit of theta behind them. Makes the IV great. See a 46% IV, but on the 31st, Halloween was 71%. So, the earnings, you're going to be very careful around implied volatility in earnings. So, it's definitely something with Amazon there, something we'll look at. And the last one here, MicroStrategy, because again, Michael Saylor and MicroStrategy, they are doing an issuing here. That's what they do. They sell. I can't hold on here. I wasn't clicking right. Oh, we'll just search it that way, I guess. Oh, MicroStrategy. I didn't mean to, but that's what we did. Let's see here. I'll go back over to my page. So I shared about MicroStrategy last week. With their capital raise, and they use their proceeds from those for more Bitcoin. I know sometimes I post a lot. Super microcomputer. Let's see here. Oh yeah, Warren Buffett added more Siri. Oh, here we go. Let's see here on Halloween. Michael Saylor, MicroStrategy up to 21 billion. Yeah, that's right, 21 with a B. Up of common stock in exchange. Basically, they'll use their proceeds to buy more Bitcoin. So I'm not sure where you stand on Bitcoin, but let's pull up MicroStrategy. We've talked about these in the past. They correlate a lot with MicroStrategy. They have an exuberant amount of unrealized gains on their Bitcoin position. So let's see MicroStrategy on the day. Let's zoom this in a little bit. I know it's just wild where we're at here. 229.71 on the close Friday. We saw that rally up to 267.86 on the 29th. We had talked about it last week. It was we've been watching it for weeks. It's been a name. There's been opportunities there, expensive premiums, but there's been a name. There's been a trade there nonetheless. And then the high Friday 255.75, low of 225.93. The close at 229.71. But let's see, the 9-day EMA 235.06, the 20 EMA 217, the 50 172.27. So is it up? Is it down? Has it got volume? Does it correlate with Bitcoin? Absolutely. And with capital raise, more shares coming there. Let's see, Bitcoin. Oops, I'm on my Trend Spider charts here. I don't know if I have my access there to crypto or not, because I don't use these charts for crypto. So I don't even know if this is. See, this is spot. So I'll pull up you guys can pull up your Bitcoin chart there. But that's what I was referring to with the Bitcoin. It was just kind of that correlation there. We can correlate it here with these spot. I think there's spot future contracts. Tether spot. Yeah, the correlation there, if we look at that. And then MicroStrategy chart. Same up. I know everyone likes it or doesn't like it, but let's take a look at some of that flow, because we talked about MicroStrategy before and the flow. So let's take a look at that top premium there. That's a multi-leg at the 255 call November 8. Could have been a roll there. Let's see. Because it's a large multi-leg. Let's see what they actually did, though. Again, we're using that whales to dig into it. Yeah, we can see the multi-leg denotion here. So let's check it out for size. 260s. Let's see, sold 260s and 310s for 295s. 260 and then 255, 295, 310. So definitely running a strategy here. How whales usually will pick that up is by the size and then the time. So that's how they coordinate the trades here. It's a little bit of a strategy being involved with this one. It's like a buy and a sell, a buying, and then a selling. A little more of a complex trade strategy there. And you'll see that. I mean, institutions, hedge funds, market makers, etc. Not just the normal, like retail directional type trade per se. A lot of multi-leg there with that name, as you would with a big money name like that and high premiums, because they're very expensive. So that's why you see a lot of this multi-leg, where I'll talk about that. So when you ever see me post the flows, make sure you check those multi-leg column here. It's important to denote what's there. 200, 200. These are all kind of for this week or last week expiry. 310. That's kind of up there, and that was that one as part of that strategy. So you might have seen some people posting that. 250. Let's take a look at this here. 250 for January 15, 2027. A little bit of premium there. There was some open interest. It has been growing, but these could be some selling here. So if we zoom this out a few days, this could be selling, buying back, and capturing the difference in between. As we look at the net flow here, though, for Friday on MicroStrategy, we can take a look, see how some of that actual premium was as we begin to wrap up for Sunday. Pull up MicroStrategy here. About 500 million premium there, total premium. Net premium 9.8 million. Net call premium 7.54. Nice push there into the close. So even though price was up here, price moved down. Net call premium did push back up there. Some of that highest volume, like I said, is going to center around the Friday expiry. Other than that 255 for this week that we talked about there. See, that was, I think, towards the close there. We'll pull that up, that 255. And that was part of our, let's see, for November 8th. Should be what we just looked at. Yeah, see, that's all part of the same. And that's detected by size. Doesn't also mean, though, that others are in that trade as well. Could have been other 255 call, plenty of call buyers there, besides that mega large candle. Let's see here. Let's make sure that's true, though. It's about 14,000 there. 1630. It might be close. There might be a little bit. Like, here's a couple here. I have to actually pull the tape. There's a couple. So there was a little bit. I mean, not a little bit. There was a few. We'll just say that. So, but yeah, my little strategy there for some out of the money for this week, but they weren't. They were kind of right at the money, and the premium would have moved there Friday morning. As you can tell here, let's see. I mean, on October 22nd, those were around $1,000, and they were $990 on the 22nd of October, but $1,820 on Friday. So it's doubled in what, less than 2 weeks on the move. Probably not that big of a move either, just because of implied volatility. Let's go to that daily chart here. Yeah, from the 22nd. So, I mean, yeah, the move, the high 221 up to the 255. I mean, yeah, they would have been right there at the money. It's a nice move there. Very good move. Good move on the option premium, too. If we go from the high on the 22nd, the high for a 15% move on the common, and doubled the move on the contracts. Implied volatility is great when it works for you like that. So yeah, that's awesome to see that. So as I'm looking at my list here, those are the things I wanted to talk about. Always manage a risk with this week too, especially with what we talked about in the beginning of the video with the election, Jerome Powell, the Fed rate decision. We have some economic data. We shared that in the calendar. We talked about some of the names, so definitely look at those this week. Always trade your plan. I do appreciate you for tuning in this morning or whenever you're watching the video. Appreciate you being a subscriber, supporting, and in turn, we try to make this together. We grow together. We build together. And as I attended a Lil Wayne concert this summer with the missus, because that's something, we're older, but we still like Lil Wayne. He came around and something from when I was younger. I just remembered, him saying at the end, that we're not SHIT without each other. We're just, this all works together. It was something I kind of remember that. And then other people said, no, he says that at all of his concerts. So, and we had gone to, it was kind of like our local, not local, but we gone to a state fair where he was at. So it's kind of like, oh, that's cool. It made me think about that. We're just better together. I know all of you are smarter than me, so I rely on you to, keep me going here on X and post and reply and ask me questions, and we make it work together. But thank you for tuning in to the Sunday market wrap up for November 3rd, and we'll see you on the next video, the next post. And thank you for watching. I hope you enjoy the rest of your weekend, and be safe in the markets this week, every week, and all of your weeks until your trading career is done and you're retired. Hopefully in the bright, green, positive side of things in your portfolio. Enjoy your day. Have a great rest of your weekend.